evening, everyone. Quick look here at the North American equity markets, and it was a little bit of a downtick day across the board, but of course that follows incredible strength in the markets last week with new record highs being reached once again. In terms of the specific sector movements in the United States, energy as well as tech led the declines. We did, however, see strength in financials and consumer discretionary and consumer staples. In terms of the market narratives, really no change. We continue on the positive side to hear about reopening momentum. That, of course, driven by vaccine optimism and progress. We've also, of course, got central bank liquidity, so the Fed has your back once again. And of course, we heard from Fed Chair Jerome Powell saying that the U.S. economy is at an inflection point on the vaccine momentum. At the same time, it seems as though any type of taper of the liquidity programs or the bond buying programs is really going to be put off in the distance. So in other words, the investors who are buying into the market, which we are seeing, of course, money flowing into the market, are really looking at somewhat of a Goldilocks scenario. You've got fiscal stimulus, monetary policy stimulus, and we have a U.S. Federal Reserve that continues to tell us, don't worry about us increasing rates anytime soon, and that any type of inflation or increasing input costs will be transitory. That's the positive side in terms of the market moves. And of course, when we think about that as well, you've also got money flowing into the market. So there's a bit of support as well. In terms of the negatives, though, we've got some stretched valuations, and that's going to be really important to listen to as it relates to the company conference calls when they report their most recent results. Meaning that will they talk about input costs increasing? Will they pass on those costs to the consumer? If so, does that decrease demand for their products or their services? Also, on the conference calls, you've got to be listening to any type of CEO commentary, because this is one of the negatives in the market, about the possibility of increasing corporate taxes in the United States from 21 up to 28%. Some strategists out there have said that will hurt earnings to the tune of 10%. So if that ends up being the case and ends up being true, that could put some downward pressure on the valuations, which of course, as we mentioned, we're at record highs. So be very careful and cognizant of the various sectors and stocks that you own in terms of the valuations. That's a lot of what's getting talked about in the market today, that it's really a stock picker's market. Away from that, of course, we know that there's been some supply chain pressures. And today we've had the White House, President Biden, meeting with 20 company CEOs about the supply chain pressures that we're seeing, specifically, of course, in the semiconductor space. But of course, it's not only in the semi space. Away from that, on the news front, geopolitics somewhat talked about as well today. U.S. Secretary of State was on NBC's Meet the Press and did take aim at China's treatment or response to the COVID pandemic. Also took a little bit of aim at China's aggression as it relates to the Taiwan Strait. So that's percolating as well in the background. In terms of stock-specific items to watch, NVIDIA was up by 16% today. They had an investor day. The numbers that they're expecting for the first quarter are above street expectations. They also announced that they are in collaboration for a new processor chip, which will deliver 10 times the performance as relates to AI developments, or applications, I should say. Coinbase is expected to go public at about $100 billion valuation. That, of course, is the crypto exchange. Speaking of which, I always keep my eyes on QBTC, which was up by 3% today. We saw Bitcoin hit 61,000. It was up by about 2.6%, ended up the day by 0.5%. If you're looking for another name perhaps to own within the space, QETH, so Ethereum, that was up by 4.4% today as well. In terms of other stocks to watch, Nuance is being bought by Microsoft. That stock was up by 17% as a 23% premium that they're offering to Friday's close. Interestingly as well, from a consumer discretionary perspective and how consumers are feeling, Signet Jewelers was up by 8.5% today. Their first quarter and fiscal year 22 revenue, operating income, and same-store sales was raised by the company management. Tesla was upgraded to a buy from a hold over at Canaccord, talking about a wide lead in EV. And be aware as well, when we think about the reopening stocks, reopening trades, I kind of am starting to look at some of those cruise lines. But Barron's was cautious on cruise line stocks, perhaps saying that the market might be a little bit aggressive in the timing of getting back to a full return. So couple stocks to watch there. And as I mentioned, bank stocks in the United States do kick off this week. As relates to the TSX, it traded a little bit lower, but that of course is up. But that of course follows up 1.3% last week with a new record high. Canadian dollar was lower versus the U.S. dollar. From a sector perspective, healthcare was the worst performing sector, down by 5.6%, really led by those cannabis companies. Aphria was down double digits on the back of disappointing earnings results. Materials were also down by 1.6%, but keep in mind or be aware that Scotia is out with a very positive call on a commodity super cycle. And as it relates to Ontario and COVID, they did announce that they will be moving to virtual school after the April break with no return date given. Also importantly as well, the rolling 7-day COVID numbers in Canada are approaching January highs. At the same time, though, 23% of adults or 16-year-olds and older have had at least one dose, 23% of the population. So of that population. In terms of economic data in Canada, we will get existing home sales and also some manufacturing data this week to watch. So we'll leave it there. Have a great night.